Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 19th, 2026, and we're diving into Deere's latest earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Deere has just released their first quarter earnings for 2026, and there's a lot to unpack, from their net income figures to their strategic outlook for the year.
Revenue and profitability overview. Let's start with the top line. Deere reported a net income of $656 million for the first quarter, with net sales reaching $8,001 million. That's a 13% increase in revenues. John, how does this compare to expectations?
Deere's performance exceeded expectations, especially with an EPS of 2.42 cents against the forecasted $1.92. This growth is largely driven by strong sales across various segments, despite a challenging large agriculture market.
That's impressive. What factors contributed to this revenue growth?
The increase in net sales was primarily due to higher shipment volumes and favorable foreign currency translations, which helped offset some of the challenges in the large agriculture sector.
Segment performance analysis. Deere's segments showed varied performance. Can you break down the segment results for us, John?
Sure. The Production and Precision Agriculture segment saw a modest 3% increase in sales, but operating profit was down due to higher tariffs and warranty expenses. On the other hand, Small Agriculture and Turf sales surged by 24%, with a 58% increase in operating profit, thanks to higher shipment volumes and price realization.
And what about the Construction and Forestry segment?
Construction and Forestry was a standout, with sales up 34% and operating profit more than doubling, up 111%. This was driven by higher shipment volumes and production efficiencies, despite the impact of tariffs.
Strategic initiatives and future outlook. Looking ahead, Deere has increased its net income guidance to a range of $4.5 billion to $5 billion for fiscal 2026. John, what strategic initiatives are they focusing on?
Deere is heavily investing in research and development, which is expected to yield new innovative products across all segments. CEO John May emphasized that 2026 is seen as the bottom of the current cycle, setting a strong foundation for future growth.
How does this align with their market outlook?
Deere is optimistic about the recovery in construction and small agriculture segments, which should support their growth trajectory as they transition out of the current cycle.
Risks and challenges. Every company faces risks, and Deere is no exception. What are the key challenges they might encounter?
Deere is navigating several risks, including higher production costs due to tariffs and the unpredictable nature of the agricultural cycle. Additionally, uncertainties in the global trade environment and potential currency fluctuations could impact their financial performance.
How is Deere planning to mitigate these risks?
Deere is focusing on maintaining a diverse portfolio and leveraging their global presence to cushion against regional instabilities. Their continued investment in innovation is also a strategic move to stay competitive.